Wednesday. Welcome back to the final hour. It is 3 p.m. Eastern Time on October 30th. One more day to wrap up the month. We have more earnings coming after hours today. We have big earnings again tomorrow. Let's have a look at everything. Pretty active day overall. And we had some profits in Snap, which is up to $12.69 for a nice little gap fill. I got closed out here around $12, like $11.90 to $12 on the long shares. I also bought a call option for $1.20 that I closed out for $1.60. Stop loss would have done the trick. It's probably trading for 2 and change right now. Let's have a look at that. 161 is trading for 217, so that would have been a nice little just shy of $1 credit on that had you taken profit earlier in the day or now even, which is pretty nice. Visa was a winner today. Visa is trading for over $2. If you did a debit or a bull call spread with me, I closed out for $1.80 to $1.85. It's trading right now for $2.10 mid. So if you get $1.95, $2.205, nice little win there for a trade that expired on Friday. So grabbing most of the profit. Let's see, we did Snap, we did Google, GOGL. Closed out for a max credit of $5, and I had a 420 without having to wait all the way to December. I went ahead and closed out about 60+% of the profit. So the deal on this one was I paid $270, closed it out for $420, made $1.50 a contract. The most I could have made would have been $230. So $230, let's go $1.50 by $230. Most I could have made was $230. I closed out for about 65% of the profit today, and I give myself, basically 2 months of expiration to not have to worry about the trade. So nice little income play there. I'll take it and call it a day. So winner on Google, winner on Visa, winner on Snapchat. I put a new trade on Eli Lilly with the earnings going lower. Eli Lilly snapped back pretty aggressively right off of that 200 moving average. So we had a nice drop in price. I mean, we dropped all the way down about 15%. I believe it was a miss in revenue and EPS. Yep. So they missed on top and bottom, which isn't a massive surprise considering, I mean, I guess the earnings miss is a bit of a, accentuator, but I think that based on this stock price going up the way that it has, all because of a little thing called Ozempic, I mean, 212% since the lows in Q1 of 2023. For the last year and a half, the stock has just done nothing but go higher. So I look at the stock as this. If we go up in price, we had this nasty pullback during August. We tested the same highs. We had a nasty pullback again with earnings. I think this is a good opportunity to still be long, at least in the near term, for a range trade. So rather than trying to pick the bottom here, I didn't get into the bull call spread. That would have been nice, but I didn't get into that. That would actually been, I wonder how cheap that would have been had I gotten to the trade right around the open today. Anyway, what I opted for is I went a little bit longer and I put in this is a 1-1-1 trade. So I have a bear put spread along with a sell put. So it's a naked put, but I have credit and I can roll that naked put if I want to, but I have a bear trap. I'm looking at about $1.90 credit if I'm right, so I'll make some income. I will roll the sell put if I'm wrong to take a net profit, and I'll look for a bear trap for over $1,000. So max profit's around $1,200 if I trap this thing down between 690 and 600. If it stays where it is and just stays supported off that low, then I'll just make the $1.90 credit. I do have a trade running on SPX towards the end of the day. We're here for the final hour, the last 53 minutes. I'm looking to see if price will stay above today's low, which is around 58.11. I will keep a close eye on this. I have a strike at 58.10. Let me see where we're at right now. And then NDX should be, I think NDX is going to be fine. NDX, I'm all the way down to like 2350. So let me double check something here. NDX. 2350 on the put side, 2350. So I'd have to set, let me see if I can just move this alert down to 2350. So 2350 on the nose. Okay. 2350. All right. See if that will adjust. So I've got a chart alarm there on the put side. Let me see if I've got a chart alarm already sitting on the SPX. I do. I'm going to move this one up to 58.10. Okay. So as we're in session today, if I get this to pay out through the close, then price stays above this level, then I get my full credit. If price stays on the NDX above that 2350, that'll be full credit. Let me check and see what they're trading for right now. I could probably be safe and just grab the profit, but I will check first. 2, 3, 4, close. It's trading for about break even right now. I'm just going to let this one do its thing. So it's the put side that's threatened just a little bit. Here's my put spread. Here's my call spread. Um, we'll find out. So if we go back up in price, this would actually be the best thing. It is going up a little bit higher in price, and it gets further away from my put spread. And then I've got full credit here, and hopefully full credit here to max out the trade around 30 cents. And then same thing on the NDX, which would max out around 48 cents. And those will both settle at the market close today. So a couple other things to watch. Earnings for the rest of the day. Let's have a look. Let's go into, oh yeah, real quick. I want to take a look at the SPY. This is going to be a guess, but I'm going to look at a SPY trade for Friday, not tomorrow. I accidentally took this trade, but now that the day has passed, I'm gonna see if this one's a little bit cheaper. If I go 585, this is a little bit cheaper. This is around nuts. I was trying to think if we have a gap open. So there's 2 more days of earnings, and I want to show what we have up for grabs. So earnings for today after market, here it is. So today after market, we have Microsoft, Meta. Those are really the big ones as far as Mag 7 goes. I'm not doing anything on Meta at this time. I do have some ratio spreads and some 111s out towards the end of the year, but nothing immediate with earnings. If I go to Microsoft, I have a bull call spread to the end of the year. I have some ratio spreads as well, some credit spreads on Microsoft. I want to see if, even by December, January, these are coming back to retest all-time highs. Microsoft did have a correction. Meta is sitting near all-time highs already. We have Carvana, we have Starbucks, Roku, Etsy, Robinhood, Coinbase. I'm not doing anything on that one outside of I think I did a 111 on Coinbase out for the rest of the year, looking to see either one, we have a bull call spread going up towards the end of the year, see if, Coinbase starts to reflect the recent run we saw on Bitcoin yesterday. And then tomorrow morning, some more. It's not Mag 7s, but we still have a lot. MasterCard being one of them. And then after close tomorrow, Amazon and Apple will be 2 more Mag 7s. So for this week, Mag 7, let me change this here. So Google, Mag 7, Mag 7, Mag 7, Mag 7, Mag 7, right? So 1, 2, 3, 4, 5 of the 7. NVIDIA is early November, and Tesla was last week. So that covers your Mag 7. We also have some Friday plays. Chevron, Exxon, I'm watching those as well for a couple of plays on some energy. Let me take a look at the trade for, let's see. I mean, I still like the trade up to 585. I'm going to take this trade. I took this trade this morning already. It's a little bit cheaper. I'm going to put on a little bit more risk. So here's the trade if you're interested. I'm going to take a SPY trade. That is I could go end of month, but that's tomorrow. I'm going to go to the SPY really quickly. SPY here. Let me go SPY for Friday. 585 is costing me $1.60. It's not that expensive. Delta's 31. If we go up, let's see what that price would be. So if I go up to 585 minus the current price, 580.80 is a 420 move on a 31 Delta. Should be $1.30. 420 times a 31 Delta, about $1.30 on top of what I'm paying for it. So if I close out at like $1 or $2.90 or $3 credit, that's a pretty good gain. I'll take the trade. I'm going to take the trade. I'm going to do a 185 long call for $1.68. Now this expiration is out to November, so I'm going to throw this in for Telegram, and I'll throw it here in the chat as well. So bonus trade, SPY 11-1 expiration, 585 long call. I'm paying $1.65 to $1.70 debit. Closing credit order is 2.90 or higher. Okay. And why am I taking that trade? Because of this screenshot right here. So 585. Liquidity level. Okay, so I'm looking for that liquidity level to get hit. And there is the trade. See if I can edit this and throw, if I can throw in. Yep. So that one won't let me, but there's the trade right there. All right, so one more update really quickly. I added in the SPY trade for my Pulver alerts as an index trade. I'm going to reply to this SPY update. I've got a 1031 buy the 585 call. I got into that for a $1.10 debit, 11-1 expiration, adding trade, 11-1 expiration, 585 long call for $1.65 to $1.70 debit. Looking for 50% profit or better on each position. So there's that, and there is that. All right, throwing this in Discord. Got it. All right, let me jump in that trade. So right now trading for $1.68. I will take this trade here. Filled for $1.68. So right now that gives me a cost basis. I have one contract out for, I think I put the credit order already in for $2. I will watch this one for tomorrow. For this one, I'll go ahead and issue a closing order. So I'll put, let's see here, the November 1st one, I'm going to put a closing order at 2.90. Now, if we are sitting here tomorrow morning, pre-market, having this discussion with my morning sessions, if we're staring at price already sitting pre-market at 484, 58 or 585, 586, if we have like, Microsoft and Meta just crank the market up higher and we're sitting here back at these highs again, then I might remove the take profit and just see what it's opening at and close it out tomorrow morning at the open. So if I, pay $1.68 and it gaps up higher to 585, that should be trading for maybe $3 and change. Maybe I'd say $3 to $3.50. Depending on what that open looks like. So I'm looking for a gap. I'm going out to the end of the week. We'll see what happens. But the combination of tonight's earnings, tomorrow's earnings, there's plenty of Mag 7 power there, lots of market cap. If it's enough to swing the market to the upside, then I'm going to take that little stab. Okay. All right. So that's a little SPY action. Still watching. Let me go back to SPX here. Keep an eye on this one for the final 45 minutes. Hopefully we are safe to stay above 58.10. And P&L on the day is fine. SPX, take a look at the trade for today. Again, expect to move another maybe 5 points by the end of the day. Hopefully that 5 points is, steady or up. But I'll be watching. I'm not really seeing a lot to the downside unless we come back to retest the low, but that's right around that 58.10, 58.11. So hopefully we just kind of stay where we are, finish this way, and then we have earnings coming in. But I'm sitting around a 50% take profit right now. I'm just going to try to let both these expire for full profit at 70 cents on the day. And but I'll keep an eye on this one and keep referencing before close today. All right. Any other charts you'd like to take a look at? We'll take a look at currencies, currency strength on the day. So euro is up, pound is down. I do have a euro pound long, which is hopefully showing a little bit of profit now. Yep. So up a few pips there. I mean, I've got a couple levels in. I've got two levels where I bought around, let's see, that price is around 83.45. Another buy order around 82.50. I put an 82.64 buy limit. I don't know why I put 82.64. Weird. I guess I did. Maybe it got dragged up. Anyway, I'm long on euro pound, looking to see if we come back into this kind of ribbon of moving averages. If we pop back up here, we have some pretty strong support back in 2022, support back here in 2020, support back here in 2016 and 2017 during Brexit, post-Brexit. So I'm looking to see if we are going to kind of slide back up into these ribbons. I'll take some profit. I'm looking at an 8,500 level for profit, but if it comes back to, let's say, 8,450, I'll probably start looking to move some stop losses and trapping profit. So that's one trade that I have going right now. Quick spot check on Aussie CAD. I do like this one as well for a chance to go long and just trying to, kind of cost average into a long position on Aussie CAD. This isn't a bad trade, actually. Let me see here. Do I like Aussie CAD? I kind of do. I like this one enough. I think I'm going to take a couple trades on this. If I'm going to kind of dollar cost average into this. If I like, I'm not doing anything on Meta, no. Microsoft already have running. It's not an earnings play. It's out to the end of the year. But Meta, I'm not going to trade. I'm going to let that be post earnings. So Aussie CAD, if I buy here, go down to 9,000 and kind of treat this as my, my buy zone. I'll take a trade right there. So if I buy at market, I'm going to try to get this thing back up to the same high at 93.80. So if I buy at market, take profit at the recent highs, 93.80. Okay. And then I will not get a stop loss going. I'm going to take a true trade setup here, 91.40 and 9,000. I'll go like 90.10. So that'll be trade 1. And then a 90.10. 90.10 pending order. And I'll trade this non-FIFO. Take profit at 93.80. And that's just to the same take profit there, but non-FIFO. So buy trade. And my invalidation point would be back down below like 88.50. But I think we can get back up and kind of use the trend to find some support and then work our way back higher. So I'm going to add this into my FOREX trades, Aussie CAD. Buy at 9040 or 9140, sorry, 9140. Filled. Pending buy at 9010 or 9010. Pending. Stop area 8850. Daily or weekly candle needs to close below. Profit target 93.80 or higher. Okay. So in there, put in a little long position, going up to that high, and willing to take the stop loss down to there. I'll drag this a little bit lower. There we go. So that's roughly the reward to risk. Okay, so a little Forex trade there. So Francois, yeah, not doing anything on Microsoft. I just have a bull call spread out to the end of the year, 430 by 435. Meta, not doing anything outside of some ratio spreads, and this is a 111. So I have a bear put spread at 450. I've got a 400 sell put. I'm willing to own shares of Meta. I collected $1.80. I'm willing to own it if I get assigned. It's going to be a 30% discount, which for a stock like this, I'm sure will be okay. So we'll see. We will see. But also there's enough premium here that if I get threatened on the put side on this sell put, that I will probably roll it out a little bit further. So these are both out to the end of the year. I also added a trade in today on Royal Caribbean. We're trading at 209. I did a bear put spread where I ended up buying the 207.50 and I sold the 205. And I'm looking to see if this just goes lower over the next couple of weeks. We're sitting here at all-time highs. Royal Caribbean missed in revenue, beat expectations on earnings per share, but we are sitting here at these crazy highs, and I'm hoping that we do dip a little bit for that to be profitable. It didn't cost that much. I think it was like $1.10 to $1.15 debit. So not that bad. Thoughts on gold? Keep buying it. Gold's sitting here at all-time highs again. I'm not buying all-time highs, though. I keep saying that. I mean, every session I've done, everyone wants to see what gold is doing. Look, I'm happy that gold is higher, right? We're sitting here at 2 days in a row, all-time highs. Gold is absolutely crushing it this year, as is silver, as is Bitcoin. I mean, even the market's up over 20%, still pretty darn good for indexes to be as high as they are, plus gold, plus silver. The yields, let me see what yields have done today. So my point on gold is I would like to add more exposure. I trade GC, I trade GLD. On silver, I trade SI, I trade SLV. I'm going to let those continue to run because I have bigger profit targets ahead. If gold continues to melt up, fine. I mean, I want dips, I want pullbacks. It's unusual to see that gold is up the way it is compared to the indexes. I'm wondering if something breaks where gold gets the gets the nod and all of a sudden continues to go way higher, and maybe the equities market takes a downturn because the bond markets and the yields are a little bit nasty right now, right? Yields are up like 0.6%. That's 60 basis points since the September rate cut. I know the Fed is supposed to cut rates again next week, but let's see what the bond market tells us. Here's 10-year yield. Okay, it's up another 0.75% today. Unfreaking believable, man. So I mean, we had a high yesterday on 4.34. I saw the 30-year mortgage was flashing up to like 7%. I've got it shown here at 6.54, but you got to be kidding me, dude. Mortgage news daily. See what the 30-year right now is on average. 30-year. I mean, my God, we're back up to 7%. What the heck? What the heck? So we got mortgage news daily at 7%. We've got MBA and Freddie Mac down around 6.5%. Just unbelievable. Down as low as 6.11 all the way up to, I mean, it's up almost 1% in mortgages over the last 30 days. That is freaking insane. So I don't know, man. This is pretty scary. Now, granted, we've got about 75 to 80% of the country sitting in long-term mortgages that are less than like 5%, even some less than 4%. You've got like 60 or 70% that are less than 4%. I mean, everybody refied during COVID. Everybody bought homes at dirt cheap interest rates because they could. But now we are sitting here at the most unaffordable housing index we've ever seen. And, I'm watching closely. I'm trying to close on a house in April next year, and I freaking hope this thing's down, 50 basis points or at least revisits the low sixes. I would like to buy something down into the fives if possible. But my God, if I'm sitting here at, 7.5%, I'm going to be pretty mad, like extremely mad. So I'm hoping that the market isn't going to do that. And I'm hoping that this reality is not like, oh, well, you get those rates later because it's going to take time for it to work through the system. I mean, screw that, man. I mean, we're watching 1% of Fed cuts, and the bond market's like, yeah, we're just going to drop, and the yields are going to rip higher on this potential inflation that's coming. So the second wave of inflation is, I don't know how the Fed's going to tame it. I mean, we can't sit here and say that we're going to outgrow it if we go from 2.5% to 3.5% to 4.5%, and the Fed's just like, well, we'll just have the GDP go up 6 or 7%. I mean, the Fed's ultimately going to have to do something to pivot or raise rates or hike rates and do the complete opposite. And this monetary policy system will cause all sorts of drama in the markets. If we go from the most aggressive rate hike, right? Aggressive rate hike to then pausing for a long, long time to then a jumbo cut at 50 basis points to two more to cut 25 and 25. If they pause there or they continue to cut, that's going to happen through 2025. But if they raise and all of a sudden they're talking about another hike cycle, I mean, who knows? Do they get right back to 5.5%? I don't know. Maybe. If the 10-year gets to 5%, where's the Fed rate going to be? If the 10-year gets greater than 5%, where's the Fed rate going to be? I don't know. I mean, the 2-year is supposed to be roughly where the Fed rate is, so low fours. But the 10-year's like, yeah, we're disinverting, right? I mean, the 10 and the 2 versus the 10 and the 3-month. I mean, this is one thing I want to watch very, very closely. Look at the 10 and the 2-year. We have been disinverted since basically since late August. If you look at the 10 and the 3-month, look at this trajectory that the 3-month is on. Okay, the 10-year is gaining so much faster than the 3-month that my biggest concern for the equities market is this has been an undefeated indicator for this, this inverted to disinverted yield curve. And the 10 and the 2-year show the same type of thing, but the 10 and the 3-month goes all the way back here into the 80s. I mean, every time we've come out of the disinversion here, it has been something pretty terrible for the markets. And so look at the trajectory that we are on in just the last month or so. Okay, this 10 and 3-month is ripping to the upside. Now, I don't know how the equities market can hang on to all-time highs if this is going to happen. If that happens, I think the equities market may end up being the thing that breaks, because you can't have bond yields continue to rip the way they're ripping to basically say, look, you want dump all this debt and raise all these, raise all these bonds and debt for your auctions. I mean, if the Fed auctions start to fail or show weaker demand, I don't know what that does to the bond market, but something will break it. The bond market will have yields up and bonds down. There could be a bond market crash. It all of a sudden it weighs so heavily on equities that we can't go higher in equities because the bond market's in a freaking, in a dumpster fire. But this is coming up real hot, to say the least. I mean, that's really, really aggressive. So if that proceeds and continues, I do have some concerns going into, late this year or into 2025. Okay. Neutral rate. I mean, the neutral rate should be sitting around the two year yield. This is roughly what the Fed's mark should be, is around the 2 year. So the 2 year has gone up less than the 10 year, which is why we're getting that steeper disinversion, right? And the 3 month is also working lower as the 10 year is going higher, which is why that is also, angling upwards, where we might get a disinverted 10 and 3 month, right? The 10 year 3 month might disinvert, and that's a problem. So, the near term debt on the short end is just continuing to go lower. On the long end, this is essentially investors saying, you want us to hold your debt? Pay us more money. This is risk premium going up. So my concern is, I have this marked on my charts. If this 10 year gets up to 5%, if this thing exceeds 5%, something's going to break. The bond market breaks, the equities market breaks, because this is an unsustainable path if we get there, right? I mean, the Fed can't raise rates, or if they do raise rates, they'll completely crush the economy. Like this soft landing is out the window if all of a sudden they have to backpedal and pivot and do something completely opposite of what we just saw for the last couple of years. Okay. So that's my opinion of neutral rate. It's going to be somewhere around this 2 year yield. That should be what we're looking for. Now, if they cut, keep in mind, we went from 5.5% already, right? We were 5.5. They slashed to 5. Okay. So, and I get it. Like, oh, it was 5.25 to 5. So it's the same. It's the window. It's a 25 basis points window. So we went from 5.5 to 5, or I guess the better way to put that was 5.75 to 4.75, or I should say 5.25. And they're looking at another 25, so that'd be 4.5. Another 25, that's 4.25. Guess what happens? If the 2 year and the official Fed rate within 4 months of cutting is already at this price, I don't know if the market's expecting to see, like, okay, the yields will start to go down, the bonds start to go back up, and the Fed's right there, cushioned in and settled in right around that official, 2 year rate to be that neutral. The other thing that we need to think about is the PCE. So producer, what the heck? PCE is what? I guess I can just go PCE. Personal consumption expenditures, composite. Oh, it's a U.S. data point. It's not that one. Darn it. So personal consumption services. I'm looking to see just the real expenditures, real United States personal consumption and housing. There's just so many things to choose from here. Basically, what I'm looking for is year over year. So year PCE. There we go. So something here. You got the PCE price index to see if this shows up. Gosh darn it. Well, whatever. It should be around like 2.65 or 2.68. Do we have a forecast for this week? Forecast for this week on the calendar. It should be coming out tomorrow. So here is, what do we have tonight? We have Bank of Japan today. So this is like from 11 p.m. to 2 a.m. Eastern time. No rate expected to move, but JPY is going to be the JPY. So who knows? Thursday. So tomorrow morning, 8:30, we're going to have a PCE print. I don't see the year over year on here. We have unemployment. We have core PCE. I'm looking for the year over year PCE, which I want to say the last print was like 2.65. Let me go to this Bloomberg economic calendar here. Economic calendar for tomorrow, Tuesday, Wednesday, Thursday, 8:30 a.m. So I don't have a lot of forecasts here. So core PCE prices for the quarter, 2.1. These are already printed? What was up with that? What the heck? Wednesday. What? Okay, so we had core PCE that printed already today. Interesting. GDP, which was slightly off, so 3% came in 2.8. PCE prices, 2.7 came in 1.5. Now, interested. We go into tomorrow, Thursday, at 8:30. Now we have more employment, initial jobless claims, PCE here. So we're showing PCE 2.1, PCE month over month 0.2, personal income real average. Huh. I thought it was higher than that. So 2.6 came in 2.5, 2.3 came in 2.2. We will see the forecast is to go lower, 2.1. So, I mean, the trend is, I mean, the government is wanting to see this rate, this PCE price index going lower year over year. They're obviously wanting to see CPI and PPI data going lower year over year, but it's still inflationary. I mean, we have to actually go into deflation to get these, get this inflation stuff to really target 2%. We got to go to inflationary. It's not there yet. Energy's still sticky. Food and gas at the pump is still sticky. Obviously, just retail sales and PMI numbers getting pushed higher with the stimulus, and there's liquidity being added in. The money supply is increasing, so all these things are inflationary. So I don't know. It's gonna be a wild ride to finish up the year. That is probably the one thing that we can guarantee is that there's going to be the one consistent thing is inconsistency. So there's no perfect forecast. There's no perfect indicator, but we'll see what we get data wise. All right, I've got about 25 minutes to see if this will survive the close. Let me see where I'm at on my debit. So I'm trading right now about 25 cents. It's break even. I'm just going to give it a rest. Price would have to fall another 12 points to threaten, 13 points to threaten. Hopefully it does not do that. That'll be my SPX trade. Hopefully it just kind of stays right here with this intermediate support. If it doesn't, then we'll maybe have a little threat. But if we bounce up towards closing bell, then that'll be fine. Keep an eye on that. I agree. Kyle says I don't be like deflation is bad. I mean, deflation is not bad. I mean, technology is deflationary. I mean, the things we get now, it's like a computer that you spend $1,000 on today can get you a lot more bang for your buck with the technology and the capabilities that a computer has. Phones, I mean, I can't believe that phones, I mean, I don't even know what the first cell phone was that I had. It was like an old flip phone from Verizon that was probably $50 to $100. My last freaking, I mean, now you have to finance phones for crying out loud. It's insane. But what do you have on your phone? You have literally everything. People don't buy cameras anymore. You've got the internet at your fingertips. I mean, the apps, the tools. It's ridiculous what you have. The tools and resources on your phone. I mean, it's a deflationary technology. But when it comes to since COVID, everything has just been more expensive, and it's the hidden tax when you got inflation that's actually going higher. They're trying to tell us like 2%, 2%. We're like 11% higher than where we were before. The trend of inflation is much higher than what the numbers actually show. And on top of that, we have government spending that is just absolutely out of control. So does it end? I don't know. Does it change? I don't know. We'll find out. So, and I don't know where 2% even came from. I don't know why 2% is considered good. I mean, it's honestly, it's like, why can't we have zero inflation? Why can't we have zero increases in things? I mean, if we have inflation that's up and we have the dollar purchasing power is down, that's what inflation's also doing. It's just always debasing and ruining your purchasing power because you take more dollars to buy fewer things, right? And that's not a trade-off that is an advantage to the consumer at all. But meanwhile, you got the stock markets is like, oh, the stock market's up and you can keep pace with inflation. Well, yeah, but your dollar and purchasing power going down because everything's more expensive. So it's the tricky trade-off. They say that inflation should be about 2% a year or lower, but then there's deflation, which they say is a bad thing. I don't know why. Probably because the government needs to have inflation in order to have debt and have growth. Right now, we need to have about 2% of debt. Actually, if we go 1% debt, that might give us about 50 cents. Or if we have $1 of debt, we get about 25 to 50 cents of growth out of that. So basically, we're taking on 2 times the debt for maybe $1 of growth, or maybe even 1%. So 2% debt for 1% GDP. That's pretty much our current state. There was a guy I listened to a great podcast maybe 2-3 weeks ago. I think it's Yardeni Research, Yardeni. I found him on the podcast for, let's see here. I'll just go into his website. There's a bunch of stuff here. I mean, there's a bunch of free stuff. He's on podcasts all the time. He's on a bunch of YouTube videos. So it's, I mean, charts open to the public. You know, I don't know. You can explore what you want, but there was a podcast that he did with, it wasn't excess returns. It was some other one. Let me see here. I'll just find it. I'll find it. Give a shout out to this research company. So Yardeni Research. And let's see if it pops up on one of my melt up. No. This one. Oh yeah, this one here. So let me post this video. The case for Roaring 20s. This is with it is with XX returns. Okay. So let me show this one here, and I'll pop that in. So this is a good. I mean, it's kind of depressing, not gonna lie, but it is. It's a good listen. It just kind of shows the state of where we're at. I mean, there's no stopping this debt cycle, and the government's going to basically try to outgrow it. If we can print enough and we can inflate enough and we can grow enough, then we can outpace our current debt. Probably not sustainable, but who in the right mind politically is going to talk about austerity and talk about actually balancing the budget? It's impossible at $36 trillion. So it's never going to happen. But what they can do is possibly grow like crazy, and we might have a manageable second wave of inflation, but I don't think it's going to be good. I think something's going to break like it always does. And what we typically see is yet another boom and bust cycle. So when does it happen? I don't know. And I'm not putting a top on this, and I'm not putting a timeline on this, but I would say when and if it happens. I mean, look at your stock prices. Okay. All we have to do here is see the market, correction wise, it comes down to finds the 200. That's a big correction. If we break that structure and we fail to go higher, then we have a correction. What percent value could be lost? 10, 20, 30, 40, 50. Is that painful? Absolutely it is. Is it buying opportunities for the longer term? Absolutely it is. So something's going to happen that's not going to be great. But the question is, are we going to be up over 600 on the SPY before it drops, or are we going to be dropping now before the end of the year? I have no idea. So what I'm doing is I'm playing the hedges to the downside just for a little bit of protection, because right now I think the market, if it's going to drop, it drops and has enough to get down to maybe 8 to 10% to find this 200, and then we'll see if that is going to do this, right? The market could do this for a while before it kind of rolls over on itself. This could take a long time to top out and a long time to actually form that bearish confirmation, right? Or it's just like, bye-bye, and then it's backstop, and then it's Fed, and then it's cutting rates, and it's emergency everything, and then the market absolutely tanks, but then things are reset. You get decade worth of discounts, and then you buy, and you hold, and you're back up to these highs in maybe 1 to 5 years. So if you're an opportunist with cash at the ready, you can take advantage of that. If you're fully invested, I hope you have some protection to the downside in case things get nasty. Make sense? All right. Yeah, that's that's a good reminder. Thanks, JJ. I will push out. Is it fuzzy? I mean, I can see my 720 push and I can read it. I get it. It might be a little bit fuzzy. I can push out 1080 tomorrow. I'll try to remember to do that in my stream. I mean, I've got a brand new computer. I've had it for a couple months. This thing's a beast. So it shouldn't be a problem if I'm pushing out, 50 browsers and 10 applications, and I can still run it 1080. Got it. Not bad at all. Okay. I didn't think it should be bad. I'm watching my screen, so I can see all the numbers. I can see my EMAs, 21, 50, 100, 200. I can see it. So, unless you're looking at it on a tiny little screen, watching it on your phone. All right. Anyway, so that's that. What else? We got about 18 minutes for the close. SPX right now holding above my 5810 barrier that I need. NDX holding above my 2350 that I need. SPX is a little bit closer, but it's about 15 points away. Take a look at my expected move right now. My put side is trading at a 6 delta, so hopefully I'm still looking at about a 94 to 95% chance that this is not going to be threatened. Even if it is, I technically have until 5109.70. If I want to get really particular on what my break even is, But if we just stay where we are to close in the next 17 minutes, let's see if this will hold current. Okay, hopefully it does. If it does, great. That'll be SPX for 30 cents and NDX for 40 cents and turn a nice little patient day into a nice little win. And that's closing bell. And then some other trades worked out just fine. I put on the SPY trade today with all of you. If you're interested, I took that SPY trade for Friday's expiration. I have 2 trades on the SPY. Where did futures go today, by the way? Let me see what this looked like from the opening bell. So open. There's my ES open right there at 9:30. Oops, is that a 9? Oh, this one. So that candle. Look at that. Look at that noise, man. Big drop, big up. That's today. Yep, sure enough. That's just crazy noisy. And then we break up, we retest, we go up again. Let's go to the Qs. That's my 9:30 candle. There's my high. There's my low. Qs looks like a little bit more of a struggle bus today. Big rip down all the way back up the test. And we started to fade that going all the way back down to the lows again. So futures didn't really cover a lot today. We're sitting right here at the weekly VWAP, just around it on the ES and NQ feeds. So no real direction. Taking a look at this chart, again, no real direction. We have earnings coming today, tomorrow. We may be capped to the upside around 585, 586. That is the all-time high in the SPY, which goes back 2 weeks now. That was 586.13. That was back on a gap higher that we actually were long the SPY with a nice little trade, and then we gapped up for a big profit there. We were short with a long put on the SPY for a nice profit there. No directional trades until today, where I'm trying to get long back up towards 585 or so. Hopefully that liquidity level works out. Okay, and then back to the SPX. As long as we stay above 58.10, that'll be full profit on the day. So hopefully it's there in the next 15 minutes. Come on, bulls, you can do it. Center yourself. Be one with the market. All right, anything else? Currency pairs, I threw in that trade on Aussie CAD, added that in. Dollar index, let's take a quick peek at the dollar index. I had somebody in my Discord say they're liking the signs they're going to be short the dollar. I'm saying I'm not quite there yet. I'm not convinced. I think this is a perfect spot to be indecisive, and then the dust settles, after the election. In my opinion, the dollar trade is going to be after the election. Whether or not we find direction here or direction here, I don't know. But I'm not calling this the top, unless of course you have a stop loss in, and that's okay. But it's going to be pretty noisy. I can't guarantee that that's the top. Obviously, you can never guarantee a top or bottom, but even here to go sideways, don't be surprised if it chops and spikes and tests, but then closes lower and then works its way down. That's what I'm looking for a topping pattern. If we just kind of roll over, if we have a big aggressive candle and then we pull back and fade, then sure, we look for lower highs and lower lows. But I want to see this kind of roll over. I just think we're going to be doing it after the election, not necessarily after the election, after the Fed. Maybe the coast is a little bit clearer. Right? Okay. Hood after, I don't know. I don't care. Robin Hood's already up a ton. The best spot to be buying this thing would have been all these lows from 2022 to 2023. If you bought the shares at 850, it's up, 200 to 300%. That's the trade on Robinhood. Right now, I could care less. The only thing I'd be looking for on Robinhood would be, you'd have to think trading activity's got to be up. They don't charge any commissions on trading. I guess they don't trade on options permission. Right? So if you're trading options on Robinhood, is it free? Is it commission-free option trading? That again goes to what they get paid on, which is paid to order flow. So they're pushing your orders into a clearinghouse, probably through a Citadel or through some major clearinghouse in order to get paid, and then to say like we're democratizing trading. Which if you watch the GameStop documentary, you'll see that that's not the case at all. They're getting paid. They're just getting paid for your orders. Okay, they're just not passing on that expense to you. But they're getting paid for their user base, which has been increasing, and the stock has been up, and it's legitimate. It's regulated. I'm sure they got deeper pockets than they did back in 2021 when GameStop nearly broke them. But I would say for earnings, I don't know what the expected move is, but I'll look at my broker platform. If we pull back into the 21, the 50, the 100, sure. How about this? Pull back like we did here, and then get a close above, and then we can go long. This is in a pretty good trend. Trend has been established since we started making higher highs and higher lows. We've got really, really nice dynamic support in these moving averages. So can we, have a miss in earnings somehow, find a level that's attractive, and then maybe play it up? So that's what my trade would be. It's like, if it goes higher, fine. I'm not chasing it. If it goes lower, well, there's obviously structure here that I could buy and then see if we can return to those longs. Okay. All right, that's a little Robin Hood. UFO, procure space ETF. I don't know. What is this? Pure speculation? What does this thing do? First Global Aerospace Defense Fund. Oh my God. I mean, I have no idea. How do they make money? It's an ETF. I don't think I'm going to get much out of it. Let's go UFO ETF. Stock analysis. What does it say? I mean, this is probably something I'm not going to touch. I have no idea. I mean, is this catering to the wealthy that want to go to space? Cool. You're going to buy something that the 1% can take advantage of. I don't care. You know, is going to space going to be the same cost as going, domestic flights right now? Probably never. So maybe my final death wish will either be a roller coaster that kills you, and that was an engineer project, by the way. It was a roller coaster project that did this. It did this so many times that you would die. It obviously never got built, but I was like, that would be pretty awesome. Okay, so if the other one is going to space, make sure all my orders or all my my life is in order, my pass along inheritance, whatever, everything's in order, and if I have everything ready to go, then sure, I'll go to space. But I don't know. I don't know what to do with this ETF. You've got some good support back here in COVID. That's about the only way I'd say this is an attractive spot. Is you're willing to throw some capital at it, then get your levels at 15, see if it comes back and tests, and off you go. If you want to buy it now, you buy it once, you buy it twice, and you either let this thing go to 0 or you put in a stop loss below that structure at 15. If it goes up, you got upside. So, I mean, there's asymmetry here, which is good, right? If we take it down to 0, then there's obviously more risk. If you actually stop yourself out, then you get out. So there is upside, but I'm not touching it. Okay, you're saying you wouldn't want to live on Mars? Not really. I mean, I don't know. Have you seen The Martian? Have you seen Downsizing? I mean, have you seen Total Recall? I don't know. So, no, living in space does not appeal to me right now. How am I supposed to play golf in outer space? Anyway. All right, what else? Any other currencies? So dollar index, I'm waiting. Japanese yen, I could care less. Swiss pairs, I'm still long for positive swap. Aussie CAD, I like long. Euro pound, I like long. Dollar CAD, I'm looking for breakouts. Okay, gold and silver, we talked about. Dollars pulling back here at these tops on the dollar CAD, which is fine. I'm not in the dollar CAD. I'm looking to see if we break and go higher. This is just a multi-year range, and I'm looking for a breakout. If oil breaks the floor, I think that dollar CAD heads up to 4,500. That is what I'm stacking up here on the trade. Okay, we've got 9 minutes left. Come on, price, don't be a turd. 58.19 on the SPX. NDX is at 24.16, coming down towards the lows of the day. SPX, same thing, choppy. Just stay there. Just stay at 80, 50, 58.20, 58.22, 58.25. Don't bother me. All right. Give me my full credit. DAL, Delta Airlines. Delta Airlines up to some fresh all-time highs. We had earnings that were a miss, but it didn't stop price. United Airlines was probably a big contributor to why airlines are up higher. Look at United Airlines. This thing has just gone ballistic. I will say this. If I get United Airlines, it's not now, but if United Airlines comes back up to these highs again, I am probably going to short that with an option trade. So it's defined risk, but I don't see this necessarily just going gangbusters without having some type of pullback. So United Airlines, I mean, this thing is a daily chart. Look at how aggressive this move is. This is insane. So I would like to see some type of check of this, inefficiency here. Whether that is, a pullback on the market, a pullback on the stock, a miss on other earnings for other airlines. But JetBlue was a big miss, and they're down like $2. I should have bought a put on that, but I didn't. but UAL has just been ripping to the upside. And I mean, there was strong support, but I was trying to get this thing back into the the 30s. I had a couple trades in here. I do have some AAL, which is American Airlines, and this one's also up a decent amount. I've got some puts in here below $10, and that's looking for full profit, but not even close to the same trajectory, right? Delta is looking pretty darn good. Same type of thing. I mean, I don't want to necessarily call the top on Delta, but if we come up to these levels, same thing on UAL, I would probably look for a bear put spread or bear call spread to short DAL or UAL. And if it doesn't fall, then what I'd prefer, because we actually have a pretty healthy trend here, is if we just pull back into these moving averages and we can start establishing some buy and dip opportunities. So a pullback would be great. DAL, UAL, I would buy some dips on those. If we come up and just get to all-time highs, then maybe a little defined risk trade at the tops. Okay. Yep, dancing around 58.21. I see it. I'm good for the next 12 points in 6 minutes. So looks like right now at the close, I should be okay. Obviously, it's not over until it's over. I've got a couple more minutes here, so as long as there's no crazy, gamma move or quick buys or sells at the close, we'll see what price does. But I've got 6 minutes. I'll stay here until the close. No sense going out and turning off the video and then all of a sudden they're like, "What happened to that guy's trade?" We'll find out. So if I have this trade crashing, then I have some risk there. I'm going to lose about $460. If it doesn't, then I'll keep my profit. And then same thing on the NDX. It's got to stay above 2350. So let's see what we get. So I suppose the final 5 or 6 minutes can be a little bit more exciting than I care for them to be. So NDX on one screen, it's down below 2395 right now, 2397. Hopefully it's just a poke of the lows and it stays where it is, but it's going to be close. I'm just saying don't be a turd, that's all. All right, so the intraday low at 580, intraday low here at 5811. Well, that's going to make my 585 call option all the cheaper, but I'm already in it for $1.68, so that's pretty much a waste of money for now. But we'll see what the trade is. What's it trading for right now? SPY. Okay, 58.12. Son of a gun, man. Well, we're getting a nasty little drop right there. We still got 5 minutes. The final 5. Does this intraday low matter? If it does, hopefully this pops back up. Same thing on NDX. If it matters, hopefully it pops back up. And then I want to look and see what the SPY is trading for Friday. It's trading for $1.32, so I'm already down about 36 cents on that trade. Okay. That candle's looking a little bit more responsive now, which is nice. Hopefully just some order flows coming in off that support. NDX, same thing. I'm now clear by about 45 points on NDX and clear by 550 for now. Still got 4 minutes left. It's all about this candle. All right, don't be a turd, man. Let's see what happens. So 4 minutes. We'll be here together until it's over. And then tomorrow's another day. Roller coaster story. Yeah, that's true. I think they actually called it the death coaster. Let me do a little search while I just watch price here. Yep, here it is. The euthanasia coaster. So up and down and loop and loop and loop and loop until you die. But it never got built. It'd be pretty crazy though. It wouldn't be a bad way to go. There could be worse ways, right? All right, 58.12. And NASDAQ is 380.95. So I still have 31 points on the NASDAQ. Got about 2.5 points on the SPX. Chart alarm is right there. 3 minutes for the close. It's getting pretty close. All right, let's see if this will give us a long wick to the south, get us back up here towards 18 or 20. Give me a free and clear close. Come on, bull, show up. 2 minutes. What's our exact count? 14. Okay, we've got about 90 seconds left. So let's ride this out for 90 seconds and see where we close. I'm hoping that we just have a nice long wick here on this final 5-minute candle, free and clear by, maybe 5, 8, 10 points. And all it is a day that, came out of the gate swinging, came up and, tested, fell all the way back down to the same low, didn't really accomplish much other than we opened here, we tested the low, and we're looking to maybe close there as well, or hopefully just stay a little bit higher. Come on. Final minute. Okay, I'm counting 35 seconds. You can see how quickly price is moving. There's a lot of crap going on right now in this final minute. This is where a lot of bots are sitting. This is a lot of quants that are trying to force trades. Hopefully it's a battle royale and this thing just stays where it is. I just feel like Braveheart right now just calling for hold. Hold. There's my line. Final 10 seconds. Trade's looking pretty good. Stay there. Stay there. And up. Okay. Close. Okay, so cash settled 58.16. Trade's okay. Cash settled on NDX 23.99. It's okay. So that should be a max 70 cents. Whew. Okay, Tesla before you leave? Sure. Let's take a look at Tesla. Tesla is trading at 257, and I am out of my trade. Yeah, I don't have to close anything. The broker will close it for me. It's going to fully expire. So my trade here at the close, this is my SPX, and I'll go back to Tesla, wrap up the sesh. So there's my trade right there by the skin of my teeth. 28.1392 with the sell at 58.10. So that trade should be fully profitable. You can see it right here for a 0.1 debit. 0.01 debit. So that's full profit. I'll take my 30 cents. I'll take my 40 cents. And that'll settle today by the broker, cash settled. It might actually settle tomorrow as far as cash settled because it's T+1. But that trade is clear by $3.74. Thank you. So I'll consider myself lucky. But that's full profit, full profit. I'll update this on my daily profit play challenge. So it closes at 0, and that is some profit on the day. So we got 30 cents credit and 48 cents credit. Okay, well, so far for the week, we started off on the 28th. Is that correct? So far, not bad. 1, 2, 3, 4, 5, 6 for 6 after day 3 on daily profit play. Not too shabby. Adding up just little contracts here, 30 cents, 30 cents, 45 cents, 40 cents, 30 cents, 48 cents. Up about $2.23 a contract. I mean, it's a good week considering the market's been all over the place. Okay, nice. William says $47 on SPX. There you go. Keith, yeah, that's fine. I mean, I typically see like 300 to 400 people. A lot of these watch the videos. That's fine. But one thing before we go, hit that thumbs up button for me. Let's get, if we've got 40 people watching live, let's get 40 thumbs up. If we get 200, 300 people watching the recording, let's get some saturation in those thumbs up. So that way, my channel will pop up when people are just searching in those thumbnails on the right, and then more people find the final hour, more people find some good trading. So I was playing with fire. It's kind of got, yeah, I mean, it's fire, but it's defined risk, man. I mean, the worst case scenario is I had a $5 wide spread and I'd lose $470. I mean, that's risk, but it's not like I was wide open where it's like I'm going to lose thousands of dollars. I mean, I had it tight and I was willing to take the risk, so I did. Did I get lucky today? Yeah. I mean, I got lucky, but I also looked at where I was for the day. It's like, well, my sell put down here was below the intraday low. So yes, it came down and threatened it, but did it close? No, it didn't. And that's nice. So, cash settled and I'll take it. All right. Final thoughts on the day. Oh, let me do one more thing. So I will show so this practical options thing, I'm still working with these final videos. I finally have some time this afternoon to do it. And so I did update some of the videos here. So my full course that'll be coming out, practical options. I'll have an on-demand video page in my Discord for any lifetime member of my services, whether that's my Pulver alerts or my daily profit play or my waterfall income. If you're a lifetime member, I will include this video series for you, as well as the strategy guide PDF, as well as well, I guess it's a video series plus strategy guide. But the strategy guide is like 70 some pages. And the video series I've been adding into this to kind of make the flow and progression better. So, intro just to say hi, understanding key terms, dissecting a risk graph, jumping into options chains on several different broker platforms, and then the walkthrough for the entire strategy guide. And then I get into the nuts and bolts of all of my favorite strategies. So 13 strategies in total, and a nice kind of full crash course understanding of how I like to trade options, take away all the confusing stuff, and try to make it very practical, very realistic. And I'm looking forward to that class going live this week. So again, I'll have that in my Discord. I'll throw it out there. I'm making it a nice incentive if you want to upgrade to any type of lifetime membership of the services I have. I'll include that. I'll also throw this out there too. If anybody purchases, I'll say never mind. Never mind. Just services that I have. Okay. I was going to say something with like a workshop. Um, but I'll save that for private instruction that typically comes in the evenings. All good. Okay. The last 2 days ended up being range days. Yeah, they ended up being range days, but look at how they were range days, Mark. I mean, it's a range day, but do you want to trade this as a range day? Down and up and down and down. Like it looks like a range day after the fact, but daily profit play, especially, like that's way more volatility than I want to see intraday. So I know the market isn't going anywhere, which is pretty much what it does all the time. But the reality is that's a lot of intraday movement to go nowhere. So I'm happy that for 2 days, we have essentially said, hey, man, let's not risk this crazy, right out of the gates movement. And, I'll find something later in the day. So yesterday I did the same type of thing. I just think it's interesting that like yesterday, the market faded all day, late in the day. Same thing here, hit a top and faded all day. So we're still trading inside of last week's candle. So this shaded red zone, this is last week's high. This is last week's low. We're still inside of it, which means we have yet to see, a movement that actually goes somewhere. So is it possible that 585 SPY gets hit tomorrow? Yeah, maybe. Maybe. I mean, I'm seeing that liquidity level still dancing around there on my platform, so I'd like to see that found. I just don't know if it's going to be something we can actually trade or if it's going to like open up tomorrow at 585. If it opens up, great. We'll get some easy profits on the 585 long call. But if it takes tomorrow to give us a directional day, then we'll figure it out. So something tells me, I mean, tomorrow's end of the month. It's Halloween, so maybe there's something spooky that's about to happen. But we go into this week with all the earnings thrown out there. Maybe there's zero direction, even with all Mag 7 earnings. Consensus-wise, I'm curious. Like, I know revisions were lower. Like, earning consensus was way lower. Like, they lowered the bar. So it's like, if these stocks beat top and bottom estimates, that's because they lowered what the expected move was. So it really kind of set it where it's not having to make like these impressive jumps to show that it's beating top and bottom estimates. Issue with that is there's clearly a lot of good stuff baked into this market already. You go back now 2 weeks of trading, 2.5 weeks, including this week. This is our previous all-time high. This is number 47 for the year, but we haven't seen it since middle of October. So still a lot of earnings this week. Election and Fed next week. Non-farm on Friday. Who knows? If the weak candle goes somewhere, great. Let's try to figure out which way it wants to go. Okay. All right. Broke below the weekly EM last week. this. So like that low to that low. I mean, we are like right now we're making lower highs. I get it. Like this could roll over a little bit. I mean, there's a lot of correction territory here. I just don't know if Mag 7 is going to do it. I think Mag 7 is probably good enough that it's like, dude, prices just stay. They just stay. And then it's election, then it's Fed, then it's everything else, and then the market just figures out what it wants to do. I'm not saying the election's a non-event, but I think the market it already knows what it's going to do. If the market's going to dive lower, it's ready to. It's just a matter of like getting this stuff out of the way and then order flows come in. If the market's going to go higher, it's letting the stuff get out of the way, order flows come in. So price is the ultimate guide. Let's follow it. Okay. No need to call the top. No need to call the bottom. I'm just going to let price do its thing. Try to be protected. Try not to do anything silly. Not over leverage. Have a margin and cash and ready to trade if I need it, and do my best. Okay, sounds good. All right, let's go for today. I'm going to finish up on my video course here and hopefully get this up and running for my on-demand page by I'd say tomorrow at the latest. All right, sounds good. I'll see you tomorrow in class. Thanks for being here. All right, bye.